This is an example for depreciation. I'm going to go through straight line, double declining, and activity based. So again, the facts are at the top of this page, and you can either pause now and work through all three on your own, then come back and compare your answer to mine, or do it one at a time. So with that, I'm going to go ahead and start with straight line. Now, the most important thing when you're doing each of these is trying to come up with what is that initial calculation I need to do. For straight line and for activity based, you're doing an initial calculation that helps you figure out what something that's going to be recurring. So for example, with straight line, it's important to figure out what I'm going to do each year because it's not going to change. And I'm going to do that calculation by taking the purchase price. And that purchase price from above is $24,300. I'm going to subtract the residual value. Now remember, when we get to double declining, we won't subtract the residual value. That's the key difference there. That residual value is $900. So I know I've got a depreciable base of, I can't do the math in my head, so I'm going to use my handy calculator, 23,400. Okay, now I know I need to do this for 3 years because as it says above, we expect the useful life of 3 years. So if I divide the 23,400 divided by 3 years, that means I'm going to have $7,800 per year. Okay, so with straight line, that's the easiest. Because I'm asking you to calculate the depreciation expense each year as well as the accumulated depreciation, let's just put something on paper so you can see each of those, right? So year 1, year 2, year 3, I'm going to put a column for depreciation expense, a column for purchase price, column for accumulated depreciation, that's what the AD stands for, and then a column for net book value. Okay, so I know the depreciation expense is $7,800 each year. I know my purchase price was $24,300, and that doesn't change year over year. All right, but what does change? Well, year 1, my depreciation is $7,800, so my accumulated depreciation is $7,800. Because remember, the entry I make every time is a debit to depreciation expense, right? That's on the income statement, and a credit to this funny account called accumulated depreciation. And it's just where we collect all of the depreciation on the balance sheet. So instead of crediting the equipment account, which would be so much more logical, we accountants like to just separate it out. So remember that accumulated depreciation account, okay, put a big star by this, that is a contra asset, right? Because we put it next to its partner equipment, and because it's a credit balance, it lowers that value of equipment. So if I'm going to make this entry each year, that means when I get to year 2, what's the balance in accumulated depreciation? Well, I've made 2 entries to it, so that balance is now $15,600. And in year 3, when I add another $7,800 to it, that balance is $23,400. Now, net book value on the balance sheet is always going to be that purchase price less the accumulated depreciation. That's what equals the net book value, right? So I'm going to put a little minus sign here. So our net book value after year 1 is the $24,300 less the $7,800, and I have a net book value equal to $16,500. The next year I take off another amount. I've increased my accumulated depreciation. Now my balance is $8,700. And then in the third year, my net book value is $900, which is the $24,300 minus $23,400. So notice, this is really important, my ending net book value is equal to that residual value. That's the whole goal. That's what we're trying to get it down to, because this is the number, the residual value is what I think it's worth at the time that I'm done with it. Sorry about that. My computer's really loud. Let me do something with my computer. Just shut that off. Okay. All right. So now let's move on to double declining. All right. Double declining. Same fact pattern. But here, what I want to do is I want to figure out what percentage I need to use every year to check in on this. So remember, the way that I'm going to do my percentage calculation, and you know, there's a lot of different ways you can do it. Here's just the way I would do it. If this were straight line, I would be doing 1/3 each year, right? Because we've got 3 years up here, right? That's the straight line. Oops. That's the straight line. To convert it to double declining, all I need to do is change that 1 to a 2 and keep the numerator the same. So now I know I'm going to multiply the current net book value by 2/3. So remember this, we're going to always take the net book value times the percentage, and that's going to equal the depreciation expense. All right, let's stop and think about this for a second. That percentage will remain unchanged throughout the life of the asset, but the net book value will change, right? Because let's go back and look at straight line for a second. Look at that net book value over here. That net book value changed every single time, right? Because as the purchase price stayed the same, the accumulated depreciation would go up. As that went up, it decreased the net book value. All right, so key point there. So you might say, well, do I care about residual value in this calculation at all? Well, you will at the end, because you always want to finish up hitting that residual value. So let's see what that looks like. So we've got year 1, year 2, year 3. So I'm going to do the order a little differently here. I'm going to say purchase price. Okay. Then accumulated depreciation, net book value, and then I'll do the percentage and depreciation expense. Okay, so for year 1, the purchase price is $24,300. Right? So I'm going to multiply that times the percentage, which is 2/3. And then that will be my depreciation expense. So let me do the math there. 24,300. So that means my depreciation expense is 16,000. Basically 200. I'm going to round it. All right, and my accumulated depreciation is 16,200. The net book value at the end of the year, after I've made my journal entry, is 8,100. Okay, so now here's the important point. When I get to year 2, right, that percentage stays the same, just as it will in year 3, but I'm multiplying it times that previous net book value. Okay, so now I'm doing 8,100 times 2/3. So now this time, my depreciation expense would be 5,400. Right, so purchase price is still the same. My accumulated depreciation, I've got to add in that 5,400 we just made. So my new accumulated depreciation is 21,600, which means my new book value, 24,300 minus 21,600 is 2,700. All right, now remember, I cannot have my net book value be anything other than $900 here at the end. Okay? So when I multiply 2/3 times that previous net book value, oops, I gave you guys like the wrong arrow here. That would say, oh gosh, you should have $1,800 in depreciation expense. All right, so let's see. If I take 2,700 minus 1,800, I end up with a net book value of 900. So that worked out right. A lot of times it won't. A lot of times you have to just stop and say, I won't take all of the depreciation expense. I will instead just stop and 20, I can't do the math here. Hang on one second. 24,300 minus 21,600. Hang on one second. I'm just doing some math here. All right, so let me go back and make sure I'm saying this the right way so that you can understand it. We had a net book value of 2,700 at the end of year 2. We multiplied that by the 2/3 to come up with depreciation expense in year 3 of 1,800. When I add that depreciation expense into my accumulated depreciation, I come up with total accumulated depreciation of 23,400. So remember, to get my net book value, I take the purchase price minus the accumulated depreciation equals my net book value. I know I can't go below 900 because that was the residual value from above. So yay, I'm done. All right, so what are your key takeaways on this one? Because this really is the most complex piece, right? Set your percentage, right? Then remember, you're multiplying depreciation expense. It's going to equal that net book value, so previous year end, times the percentage. All right, so the only time you care about residuals at the end because you can't go below it. Okay, on to the next one, which will be our units of production or activity based. All right, last one, units of production. I like this one because, again, you don't have to think too hard about it. It's kind of a set it and forget it. So I purchased, your first part here is, what is my depreciation? Write this differently. What's my depreciation expense per unit? Right, so what's the depreciation expense per unit? And I'm going to do that at the beginning, and I never have to do it again. Now, similar to straight line, I'm going to take the 24,300, the purchase price. I'm going to subtract the residual. So that should look and feel just like straight line. But now, instead of dividing it by a number of years, I'm going to divide it by how many hours I think I'll use it for forever. And that number of hours is going to be 5,000. So that means for every hour I use it, I have depreciation expense of $4.68. Okay, so in year 1, year 2, year 3, let's do the same thing again. We'll do purchase price. We'll do accumulated depreciation, net book value, and we can, actually I'll do rate in here just to make it a little more obvious, right? Rate and depreciation expense. All right, now my rate is always going to be $4.68 every year. Okay, what changes each year is actually the hours used. I better put that over here, hours used. So the problem tells us the first year it was 1,400 hours, the second year it's 2,000 hours, and the third year it's 1,600 hours. All right, so my purchase price is 24,300. That doesn't change. And now let's do the calculation. So if I take 1,400 hours times the $4.68, that means I'm going to have depreciation expense in that first year of $6,552. I'm going to put that over here in the depreciation column. And my net book value is the difference between the two. So on my balance sheet now I have equipment worth $17,748. Now remember, in double declining, I really cared about that because I had to use it that next year. Here I don't. Here I'm just going to take the fact that I've gone 2,000 hours for here, again, times $4.68, because that doesn't change. And now I have depreciation expense of $9,360. Right. When I make my entry, because remember, my entry is always debiting depreciation expense and crediting accumulated depreciation. So each year, that accumulated depreciation, that contra asset, is growing. Okay, so I'm going to add the 9360 plus the previous year's 6552. And now I have total accumulated depreciation of 15,912, which gives me a net book value 24,300 minus 15,912 is 8,388. Again, this example, I don't care about that. It's just a good piece of information. And what's my depreciation expense for the last year? Well, by now you should be good at this. You should know it's $4.68 times 1,600 hours, which is going to give us a total of 7,488. I'm going to add that into that accumulated depreciation account because my journal entry will increase it. And now I have 23,400 in accumulated depreciation, leaving me with that net book value, which again, this should look super familiar by now, equals the residual value. And I have finished that problem. All right. Thank you guys.